Petronet LNG surges nearly 4% as the company signs a multi-year ethane storage deal with ONGC worth 5,000 crore rupees.
Biocon comes under pressure after it announces its board will mull an investment in biologics on the 6th of December.
Interglobe Aviation's lower by about 1% as it's announced that it suffered mass flight cancellations in November with over 1,200 flights cancelled due to updated flight duty time limit norms.
Tech stocks continue to surge as the rupee's free fall continues. IT stocks are the top sectorial gainers on the street. Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And after a while on Chartbusters, the Nifty is standing tall and hit a good century as we speak. The Nifty up 100 points. You have the Nifty Bank as well that's doing pretty well as we speak, 200 points higher. And the breadth of the market, Mangalam, two stocks advancing, but one stock that's declining. The only thing that's red on the screen is Mangalam.
That's just my shirt. It's a deep shade of red. But tell you what, that's not a big problem for the market because we've seen a 100-point recovery yesterday from the lows, and that continues into today as well. And the distance between the red and green lines is far and wide apart right now. At the high point of trade, closing in on that 26,100 mark. Let's see where we go from here because, positions are made to see some supply around that 26,100 to 26,150 mark. If we continue to stay above these levels, then there could be a sharp amount of short covering because the FII short positions also from a series peak of 19% down to around 14%. Good time to get in. Sachi, the undertaker of Trade Bulls, for a quick technical check on the market. Sachi, yesterday was the IT stocks that did well in the first half of trade. They did not fall in the second half. The Nifty Bank came back in the second half. The market recovered. Today, right from the word go, both the IT index and the Nifty Bank is doing well. And to add to it, the third element, which is Reliance, that's too holding up right now, and all of that has caused a near 95-point rally on the frontline index. Do you think this sustains?
Good morning, Mangalam. Good morning, Nigel. And clearly, I think the constituents have significantly placed. I think this particular momentum will continue towards 26,220 initially, and we may see an extended move towards 26,300. So I think one can still chase this particular momentum even from a trading perspective. One can keep a stop loss somewhere close to around 26,050 kind of a zone, from an intra-day perspective. But positionally, I think one should retain their positions until 26,220 is not achieved. On the higher side, we may see an extended move towards 26,340 is what we are recommending to our clients. So hence, the bias remains on the positive side. We have seen a very strong rebound from its 20-day exponential moving average support, which is placed at 25,940. So unless we don't see a closing below the same, the overall structure does not get violated, and we may see this particular sequence extending its gains towards 26,300. When we look at Nifty Bank, I think the significant contributor since yesterday has been Nifty Bank, and the scale is inching higher. We may see a strong vertical rally towards 60,000 soon. From a trading momentum perspective, 59,850 is one particular mine hurdle, but we see that particular hurdle also getting crossed. We may see this Nifty Bank scaling towards 60,000. Hence, we are recommending building fresh long positions even in Nifty Bank. One can keep a stop loss at 59,220 on closing basis.
All right, and individual stocks?
TCS is still very significant. We have already seen a very strong breakout rally, commencing above that 3,200 mark, where call writers were very adamant since last few trading sessions. If you look at the overall structure, it looks like a breakout from a rounding bottom formation, which is indicating a price target somewhere close to around 3,450. One can trail or build fresh long positions, keeping a stop loss at 3,215 on closing basis for a positional target of 3,450. The disclosure would be that we have recommended this stock to our clients as well. The second stock on our radar is Yes Bank. Now, after a very long consolidation, we have seen a very strong price performance in today's session. It looks like a very sweet spot for a short covering rally. The floor is very well set at around 22 levels. So I think one can keep a stop loss at 22.30 on closing basis and build aggressive longs in Yes Bank. We may see a trading swing during the day towards 23.40, But eventually, we expect this particular rally to extend towards 25.50 in a week or so. So a buy call on Yes Bank with a stop loss at 20 to 30 on closing basis.
Okay, all right, Sachin. Thanks a lot for joining in and giving us all those calls. Well, time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Gyani of moneycontrol.com joins us to talk about a stock that he's tracking closely. Bharat?
Today's analysis will be PN Gadgil Jewellers Limited. Despite a steep increase in the gold prices, the jewelry demand continues to remain strong. The company posted record sales of 1,800 crore in the month of October, driven by strong sales in the festive month of Deepavali and Dussehra. With the ongoing wedding season, the demand is expected to remain strong. The company is aggressively expanding its store network and aims to open 23 to 25 new stores in the current fiscal. By FY28, the company aims to triple its store count to 150. Apart from deepening presence in the existing states of Maharashtra and Goa, the company has entered new states of Madhya Pradesh and Uttar Pradesh. The company has received encouraging response in the new states that it has entered, indicating a successful diversification. We expect the margins to improve given the increasing share of studded jewelry. Also, with the operating leverage and maturity of the recently opened stores, the overall profitability is expected to improve. The company is wrapping up its light jewelry business under PNG Lifestyle. Also, the jewelry industry shift towards the organized segment, owing to favorable regulatory factors such as reduction in customs duty on gold, as well as mandatory hallmarking regulations, is positive for players like PN Gadgil Jewellers. At the current market price, the stock is trading at a PE of 24 times FY27 earnings projections. The current valuations are attractive, and hence we recommend investors to add this stock. Thank you.
All right, take that point, Bharat. Thanks a lot for that. Meanwhile, just keep an eye out on a couple of these metal stocks, all of them doing extremely well this morning. The street perhaps expecting a rate cut coming in next week from the Fed. Tata Steel's moved to the high point of trade. And speaking about the metal space, we'll take a short break, come back. On the other side, we have a special conversation with the management of JSW Steel.
Welcome back. Well, JSW Steel is a stock that's holding well in the green in today's trading session, and there are a few factors at play. So let's explain this for you. Well, yesterday's trading session, the stock ended lower because there was some disappointment on the deal. But now, things have seemed to be aligned post the management clarification. So basic details, they're forming a 50-50 joint venture with JFE for BPSL. BPSL, remember, operates a 4.5 million ton unit, which has capacity to more than double, from the 4.5 odd. So more than 10 million tons is what the management says. JFE is putting in close on 15,700 crores odd in two tranches. So they come up with the enterprise value of around 53,000 crores. How is that possible? Well, JFE is putting close to around 15,750 crores for close to around 50% stake. So the equity valuation will be roughly around 31,500 crores odd. Add to that the net debt that's in that JV, that will be sitting in the JV, which is around 5,000 crores of the existing net debt, which will get deconsolidated from JSW Steel as of now. And the fresh debt that will be taken in the books of the JV. So that's how you get the enterprise value of around 53,000 crores. The deal's done at a valuation of around 12 to around 13 times on a forward EBITDA basis, which is a pretty good showing out there. Well, JFE, they have a very good experience with JSW Steel. Remember, 15 years ago, they put in around 4,800 crores. Today, that's valued at around 42,000 crores. So they have some confidence in JSW Steel. What about the holding structure? Well, now the holding will be around 50% apiece between JSW Steel as well as JFE, and the promoter entity, which had close to around 17% stake in BPSL, they will get close to around 1.4% stake or thereabouts in JSW Steel itself. Nuvama, well, they go ahead and they say the deal is, accretive. It could help the valuation fair value by close to around 37 rupees. And even Motilal Oswal has highlighted that the deleveraging exercise is something that takes priority. They have been bullish on the stock. They are pointing out that the net debt to EBITDA can fall from close to around 3. It can come down to around 1.7, and that's why they have a buy rating on the stock. Well, I had a chat actually with Mr. Jayant Acharya, and I posted a whole host of questions to him with regard to the deal as well as the way forward. Let's listen to what Mr. Acharya had to tell me.
I think the way we are looking at it is that this deal gets 32,000 plus crores of cash into JSW Steel. it will be a deleverage of about 37,000 crores from the balance sheet of JSW Steel because some part of the debt is getting transferred to the SPV. This is for 50% of the equity, which JFE will own. The balance 50% stays with us.
Okay, all right, got that. So then it appears like the deal is quite favorable for JSW Steel, going by these sort of calculations. Initially, the street's reaction was that it's a little bit lower. Give us a few details then. The last number that we have in terms of JSW Steel's net debt is the net debt is around 80,000 crores. Post this deal, you're saying that a lot of money will be coming into JSW Steel. So tell us, how does that reduce the debt number?
So yes, you're right. In 30th September, our debt was about 79,200 crores. And this 37,000 crores of deleveraging, where 5,000 crores moves out of our balance sheet because it will get deconsolidated post a joint control. And the balance of 500 crores of cash, net of taxes, will come in to deleverage our numbers. So therefore, in the range of 36,500 odd crores should be the number which will be used to deleverage the asset or spend on alternate capex in the near future.
All right, give us some clarification then, because the promoter entity had 17% stake in BPSL. What do they get in return post this deal? If it is in terms of money or it is in terms of an additional stake in JSW Steel. Just quantify that for us.
Yeah, it will be a share swap. So basically, they will get an additional share. They will get shares of JSW Steel. So the promoter entity stake goes up by about 1.42%.
Okay, all right. What is JFE bringing to the table then? In the past, obviously, you have mentioned that various technological advantages is available to JSW Steel because JFE as is has 15% stake and they have a board seat as well in JSW Steel. So what are they bringing to table in terms of a technological collaboration?
So JFE Steel, as you know, has been a long-term partner with us for more than 2 decades. The kind of collaborations and initiatives which we have had in the past, including getting the automotive steel, including getting CRNO, and then entering into CRGO technology, which is a closely held one in the world. I think these advantages have come to us from JFE over time. We also had various benchmarking studies with them. JFE has the technical expertise and technologies to get in more value-added products. So that's something which we are looking forward as a joint venture to get into the new asset. And JFE will certainly benefit from a high-growth market like India. From Japan, they see an opportunity to expand into the Indian market, and JSW Steel, being their partner and also the largest producer of steel in India, is a natural partner for them. It enables them to grow the BPSL asset beyond this 5 million ton entity to 10 million ton in the near future and more beyond that.
Okay, all right. And what is the plan then ultimately with regard to BPSL? You'll have turned down the asset cup substantially, and you'll have always mentioned on various con calls it has a potential to double capacity. So by when does that happening? Because now you have the liquidity as well. You have a very, very strong global partner. So by when do you take a call on that front?
So we see this as a double engine with one future. So, this deleveraging will allow JSW Steel to accelerate its growth. So we still remain on track for 50 million tons by 2031, and we are excited with the opportunities that lie ahead. Parallelly, it will also allow the joint venture to grow. The BPSL asset, you will recall, the 10 million was not by 2030. So now this joint venture will be able to accelerate that and be able to get that asset probably on ground by FY31 as well. It has potential for more growth, and that the joint venture partners will evaluate and then take a call in due course.
Just one final clarification then. This asset remains separate, or will it be in the time to come that you see BPSL with JFE as a JV partner getting merged into JSW Steel, and by way of that, JFE's stake goes up in JSW Steel? Could that be a plan 4-5 years down the line?
We do not envisage that now. This joint venture will remain as a separate entity, and there are no plans to merge it with JSW Steel.
Will you look at an IPO for this particular entity?
That's a long-term story which we'll evaluate over time.
Okay, all right. Mr. Acharya explaining all the contours of the deal, and for the time being, the street is digesting it a little bit better in comparison to the knee-jerk reaction that we saw yesterday. Slip into a short break, come back. We'll continue to focus on markets and stock-specific action. Stay tuned.
Welcome back. You're watching us here on Chartbusters. The RBI's monetary policy announcement is due tomorrow. Ritu joins us to tell us the key expectations. Ritu.
Will it or will it not? The decision of the Reserve Bank's Monetary Policy Committee has the street deeply divided. India's robust growth numbers for the second quarter are raising questions about the need for lower rates, despite the record low inflation opening up room for the MPC to cut rates. And the falling rupee is only complicating matters for RBI even more. Now, against this rather dramatic backdrop, the CNBC TV18 poll shows a clear majority still leans towards easing. 60% of our respondents expect RBI to deliver a 25 basis point rate cut, while 40% believe that the committee will choose to hold. But even among those that are expecting a cut, the belief is that the easing cycle is going to be very short. A strong 60% say the cycle will end in December itself, while 30% expect one last move in February, while 10% think the cycle has already ended. Now, on the eventual landing point for these rates, the sentiment clusters around 5.25% as the likely terminal policy rate. 60% of the economists back that level. Another 30% expect the RBI to settle slightly higher at 5.5%, and only 10% see room for a deeper move to 5%. Now, as far as the macro forecast is concerned, with the economy expanding at a far faster clip than anticipated, 8% average for the first half of the year already, half the respondents believe RBI is going to upgrade its FY26 GDP outlook to 7.1 to 7.2%, and 40% expect an even sharper rise to more than 7.3%. Now, the confidence in growth comes alongside strong disinflation trends as well. So a decisive 90% of those polled expect that the RBI will lower its FY26 CPI projection to 2 to 2.5%, while the rest foresee a slightly deeper cut. Now, even if RBI cuts rates, the respondents are very clear that the policy stance will remain neutral, but the tone, they say, may soften. 60% in fact expect a dovish message reflecting comfort on inflation. Now, as far as the rupee's recent weakness is concerned, most do not expect it to influence the decision, with 80% saying the currency will not impact the outcome and the central bank will remain focused on its inflation mandate with an eye on growth. Finally, the liquidity surplus has narrowed amid the tax outflows and RBI's intervention in the forex market. And from December to March, we also typically see cash withdrawals from the system. So the market expects RBI to communicate some liquidity easing measures, including the possibility of an Operation Twist or OMO purchases.
Thanks a lot for that, Ritu. Well, Russian President Putin is said to arrive in New Delhi for a two-day visit. Parikshit Luthra gets us more on Putin's New Delhi agenda. Parikshit?
India and Russia are all set to bolster economic ties as President Putin arrives in New Delhi on a state visit. This will be Putin's first official trip to India since the war in Ukraine began in February 2022. The two-day visit is scheduled to begin with a private dinner on Thursday at Prime Minister Modi's residence. The leaders are likely to discuss a free trade agreement which will be signed in future. So what does New Delhi want from Moscow? First on the agenda is boosting exports of pharmaceuticals, agriculture and textile products. India is also looking for stable fertilizer supply chains with Russia, along with higher exports overall. The two nations are also likely to sign an MOU on migration to enable mobility of skilled workers from India to Russia, and also boost connectivity between the two countries, which will help trade. Non-tariff barriers, regulatory impediments, defence co-development and export of defence equipment, including the BrahMos, to third countries will also be discussed. Remember, trade between India and Russia stood at $69 billion in FY25, with India importing $64 billion worth of goods and services. So clearly, India would want Russia to buy more and bridge the trade deficit.
All right, we take that point. Thanks a lot, Parikshit, for that. As we move towards the end of the show, just keep an eye out on the market. There's been a smidge of a decline from the top, and that's been led by the mid-cap index. So the mid-cap index comes up for you from the highs. That's seen a bit of a decline. No real worries for the other indices. What we'll do is wrap up on this edition of Chartbusters with the news that Trading Hour comes up next.